Good morning to all of you. In this particular presentation, I am going to release the trend report for the Nifty and Bank Nifty for the coming week. So this will be the 133 weeks trend analysis. Out of this 108 weeks success it has given. So before I go to the analysis of the trend and how to use that particular levels, I just wish to draw your attention to couple of announcements, and I will also draw your attention to the last week's trend analysis. So first, I'll draw your attention to the forthcoming seminar which is being scheduled on Monday. So we have scheduled one event on WD GANs concept. So this events 21st and 22nd I have scheduled. So 21st of May you will experience some basic GAN principles, GAN square of 9, GAN angle principle. So based on that, how we can do the trend analysis. If you are interested, then please register here. The registration link is being given here. Seminar link itself, you visit and register here. 22nd May, using the same concept on the live market, I'll be demonstrating how far these concepts are true, whether these concepts really work in the market or not. That I am going to explain on 22nd May on live market. In live market you will get it. So this is the forthcoming seminar, and the trend reports whatever we are generating, you can just visit the download link of our website and download that trend report from here. We have also one learning app we have given. All our concepts on futures and options, intraday trade, stock selections, technical analysis. So this is a mobile app you can install and you can use this app for your learning requirement. And whatever the concepts we advocate, like GAN square of 9, GAN square of 12, which you are going to learn on Monday. GAN square of 9 you are going to learn. On this also we have a mobile app, free app, so you can download it and start using it and experiencing it. So many free web apps and mobile apps we have that you can take benefit from. And my second announcement is we are running on offer on our entire course. So as all of you know, we have different courses and different softwares. So if you wish to buy the entire stuff of softwares and courses, it will cost you 15,500. This offer is there. If you wish to get a full-fledged knowledge on the subject of technical analysis, intraday trading, option trading, you can make use of this offer. And recently also we have launched one section for mutual fund, wherein you can able to buy the mutual funds in our website, in Smart Finance website. And so far we have just enabled 6 fund houses. So if you wish to start off a saving habit, you can also initiate some transactions here. So these are the couple of announcements. Now going back to my second explanation on how our trend performed last week. So this is the analysis we have given. Many of you have downloaded that. So 11th May, this analysis is being given to you. So I have also transmitted specific SMS. I have also sent one email suggesting you that this week there is a big state elections result is coming. In this kind of most volatility scenario, try to test our report. This is also I have told. So this report is being given to you on 11th May. I am just today I am verifying it. What are the things happened? 15th May, the high of Nifty was 10,947.9. This is one of our targeted figure. I used to tell, whenever you accept this report, you must validate the everyday basis from Monday to Friday. What are the highs it has given? What are the lows it has given? And how far these levels are true. So based on that, you have seen that this has come on 15th May. 18th May yesterday was a downtrend day and the low was 10,586 and the last target in the downtrend was, we have calculated as 10,576. So this is what we have calculated for Nifty. This is what happened on the market. Now coming back to the Bank Nifty, what happened? That also let us have a look on that. So whatever the levels we have forecasted for you and what are the things it has given. So Bank Nifty level, if I can go for Bank Nifty level, you can see 15th May Bank Nifty has made a high of 26,926.65. This is the high. Just correlate with the last but one target. We have what we have calculated 26,926.17. Exactly from that price point reversal happened. And here it is coming to 25,810 and you can say that the last target is 25,745. Last but one was 25,903. This is also very close near to one level it has given. So this is what the outcome of the last week's trend analysis. Coming to the coming week's trend analysis. Coming week, this trend analysis report you can able to download from our website as I have shown you from download link. This is the 133 weeks and valid from 21st to 25th May. So 10,608, real time volatility 8.46% and we are getting all these calculations. So now how to trade using these levels, I have given a explanation here. And a couple of queries also people used to ask me time to time. So Monday or oncoming week, if you are getting the buy trend breakout initially, then you must buy it with one 10,650 put option. So just I wish to draw your attention what I have said. If you are getting the uptrend breakout initially, Monday or Tuesday, anytime during the week, if you are getting the uptrend breakout initially, you need to buy here, hedge it with the 10,650 put option, and these are the following targets. For this buy trade, your stop loss will be 10,561. If you are initially getting the uptrend breakout, this is the third time I am repeating the same sentence. If initially you are getting the downtrend breakout, initially, as week started Monday, by market opened some prices and it is giving you specific breakout. Then initially you got a breakout here, then your stop loss will be 10,655. You need to hedge it with the 10,550 call option. So this is how trade goes. So initially wherever the trend breakout happens, based on that trend breakout, you need to choose the options to hedge and you need to choose the stop loss. So here some users have told me that if I am buying here at 10,637, why I will not put 10,579 as a stop loss? Why I should put 0.38? This is a finest Fibonacci principle which says 0.236 retracement sets the trend, 0.382 retracement confirms the trend, and same Fibonacci principle also says 0.618 to 0.786 is a death zone or a trend reversal zone as per Fibonacci principle. Same Fibonacci principle also says that this is 1.236 to 1.618 is a growth retracement or saturation retracement zone. So you will be experiencing, if there is a trend reversal happens, it will happen from here. If there is a trend reversal happens, it will may happen from here. If successfully these levels are being penetrated, then the second cycle, third cycle will go on. So this is purely on the Fibonacci principle. We do not have to do anything on that. We have never tampered it. Whatever the Fibonacci principle has said, that only I have repeated here. Only our job is here, the reference point from where we should start the calculation. I am taking 10,608 last traded price. If you are using the Fibonacci principle in the traditional manner, you will be taking the high and low. That high-low difference you will be taking, and from there you will be putting all those your retracement lines. And for supports you will be taking from high, resistances you will be calculating from the low. But I have just contradicted that idea. I have taken the last traded price as a reference point. It is a neutral point. It is neither high nor low. I have not taken the high-low difference. I have taken the one standard deviation, and from there I have just derived the price range. So these two changes enhance the success of Fibonacci technique to many folds. Many folds it has enhanced the success of Fibonacci technique, which you have experienced last week. And it is not the only one experience you buy into. Follow it for a couple of weeks and then you decide. I have also given a payoff analysis here. If you are buying in uptrend along with the put option and different levels of targets, what will be your net profit you will be getting, and if the trade hits the stop loss, how much loss you can incur. This also I have given based on your initial trend breakout. Initially uptrend breakout has given, so you have entered to the trade, but once the uptrend breakout is given, it doesn't give you any guarantee that downtrend will never come. It doesn't give you any guarantee that stop loss will never hit. There is a chance of stop loss hitting. For that we are hedging it, so that if the stop loss hits, we can recover a part of our losses from the hedging component. So if you are initially getting a downtrend breakout, you are hedging with a call option, and the net profit and loss analysis payoff also I have shown you here. So each time you are hitting the target, I have also told you to use a trailing stop loss. So once you hit the first target, which according to me is 0.618 here, you must trail your stop loss to 0.382. Once you are hitting the second target, trail your stop loss to 0.5. Once you are hitting the third target, trail your stop loss to the second target. So because herein you are just going for the saturation band. For that reason only you are just putting the stop loss just near to your previous target. So by this process of trading, if you follow the hedging approach of trading, if you follow this technical way of trading, it is too simple and it makes you a scientific trader and it makes you a very comfortable trader. Many methods you can follow, many type of criticisms you can draw. However, if your trade is simple and if your trade is planned, then only you can able to make money in the market, or else it is quite difficult to make money in the market. So same way, Bank Nifty we are expecting, if it is giving a breakout above 26,056, then the targets of 26,140, 200 and all will come. If it gives a breakout below 25,786, then you have all probability to hit the last target of 25,347. You must hedge the Bank Nifty buy trade with 26,000 put option. You must hedge the Bank Nifty sell trade, which is 25,786 with 125,800 call option. So this is how, if you trade, then your trades will be highly refined. I also request and appeal all of you the traders, those who are viewing this video or downloaded this report, please forward to your trader friends, so that let them experience first how this levels works, how this method works, And if they are convinced with, they can follow this method for their trend analysis. So one standard deviation software, which is a very small application which costs you 5,900 initially, or this 5,900 including the tax for 1 year, and this particular software available in the desktop as well as in the mobile edition with us, and it maintains the same accuracy in the equity, commodity and option analysis. Only to demonstrate that yes, this method works, we are just releasing this weekly trend analysis from past 133 weeks. Follow this report for the coming week and give your feedback if any to the below given email ID. I will be glad to answer your queries. Thank you very much.